Welcome to another exciting show here on the Professional Edge. My name's Todd, tax attorney, CPA, and certified financial planner. And what we're talking about this week is investment tax planning. Think about that for a second. We are talking about investments and how we can coordinate tax planning. Being a licensed CPA and a tax attorney, we bring that information, and when we think about our rate of return on our investments, it's actually what we have net spendable, and a lot of people don't take into account the tax consequences of their investment portfolio. They just sort of go along and, they get the 1099 on April and they file that with their tax return. And lo and behold, they sort of pay some taxes on money they're not spending. So that's one concept I want to talk about this week is let's not pay tax on money you're not spending. So think of your 401k that is receiving interest and dividends depending on your allocation within the 401k. And within there, that produces that interest and dividend income. But because it's in that 401k, then we don't pay tax on those dollars. So again, we have this ultra compounding because now we're receiving income that we're not paying tax on, and we have more there to compound and get a greater rate of return. And that's the magic within these tax deferred accounts, 401ks, 403bs, IRAs, Roth IRAs, is we don't pay tax as long as we are within those wrappers. So that's one concept here on the Professional Edge I want you to take away is let's not pay tax on money you're not spending. But we look at client portfolios that they schedule their appointment. And again, that number to do so is 877-654-9798. 877-654-9798. We can meet down here at the Cunningham Center in Columbus. We can meet up here in Atlanta if you want to journey and see what traffic is like in Atlanta, or with the onset of the work from home concept, we do Zoom meetings with clients all over the country. So again, back to this tax deferral. Well, we receive client information and we're looking at the client allocation between their after-tax account, their pre-tax account, and we say, okay, do you understand why you're holding this investment in this account? And they're, they look starry-eyed at us and we're like, okay, that makes sense. Then, we'll say, okay, can we see your 1099 for that last year? And they produce a 1099. We look at their tax return. Being a CPA, we can glean through that pretty quickly and see some things we can help clients with. And we look on Schedule B as in boy, and that's your interest and dividends. And lo and behold, there's interest and dividends being reported, but the client's not spending those dollars. It's sitting there inside the investment account generating those taxable transactions, and the client doesn't really realize that. But if we receive ordinary interest and ordinary dividends, well, guess what? We have a tax impact on that. And as interest comes in, it's ordinary income. And if you're in the 30% bracket and you received $1,000 of interest income, you basically earn $700 because your net tax consequence took away $300 of those dollars. So therefore, you didn't earn the $1,000. You actually earn $700, and that's what you got to keep. So that's a concept that we at estate management counselors try to focus on. Again, we are licensed to give tax advice to our clients, and that's why this is a pretty important show on that concept, because as inflation continues to rise and it doesn't seem to be going away anytime soon, we need to make the most of what we currently have and make sure that we are doing smart financial decisions. So again, when you have that 1099 and you're looking at it, that goes on Schedule B as in boy, the interest and dividends, and you're paying tax on money you may not be spending. That doesn't make financial sense. So why don't we restructure that portfolio and receive the interest and dividends in the bucket that defers the payment of tax until you actually pull those dollars out and spend them. Now, if you're spending these dollars, that's fine. You You got to pay some freight, that is the tax bill to the Internal Revenue Service, as you go along. But if you are holding those dollars and you're not spending it, it doesn't make any sense to lose 30 cents on the dollar for every dollar you earn as interest and dividends. So again, wake up call. If you've not analyzed your 1099, your 1040 tax return, and your account statement, well, that's the unique concept that estate management counselors brings is, being a licensed tax attorney, a CPA, and a certified financial planner. We can do all three of those disciplines and put that so our clients actually receive a better benefit, a coordinated approach to their investments and also their tax planning strategy. So that's one key concept is do not pay tax on money you're not spending. So what's another investment tax planning? Well, a lot of our listeners out here have some rental real estate, and we know right now that if you're trying to refinance, that those mortgage rates are 7% plus. Excuse me. So on that, we look at that and say, okay, does it continue to make sense? Everyone is receiving these higher real estate tax bills. We're seeing condo associations produce these special assessments because of the collapse of the condo down in South Florida. And now the insurance company is coming back through and saying, okay, we need this inspection done. And lo and behold, we're not going to take the risk. We need this repaired. We need the parking garage secured, other things such as that. So these special assessments come through, and it's putting a bigger burden of carry cost on the investment property owner. So with that in mind, what we need to do is actually say, okay, does it continue to make financial sense for you to own that rental real estate? Now, a lot of our listeners have that rental real estate because it's an investment strategy. It diversifies the portfolio. I get that. And number two, it might be a tax planning strategy because the magic of depreciation. So we all know that rental real estate has a 27.5-year life that we set up for depreciation. But what we do is the strategy going forward is when you buy that new condo or that rental real estate, that we bifurcate and segregate the asset purchase. Now, what does that mean for the listener here on the Professional Edge? What that means is we don't assign all the costs to 27.5-year life. What we need to do is actually split those things out because the systems within the house are not 27.5-year life. We know that a furnace doesn't last that long. HVAC doesn't last that long, especially down in the South where it runs so long. So what we do is we segregate those assets and then we set up the depreciation on a shorter life. So if we have $10,000 and we do it over 27.5 years, we're not getting much depreciation. But if that $10,000 can be written off over 5 years, then we get more depreciation up front. And therefore, if we're taking greater depreciation, then we're going to have less taxable income or net rental income, and therefore you're going to pay less tax. Now that is a integrated strategy, and being a listener here on the Professional Edge, I'm sure you're just shaking your head going, okay, what did he just talk about? Well, what we did was instead of saying everything within that rental property being 27.5-year life, we bifurcate, we segregate the assets, and then we split out the depreciation so we can take greater depreciation over a shorter period of time. That's the essence of that investment tax planning strategy for that rental real estate. So that's a pretty good concept to put forth. And being a rental real estate owner, think about that and you say, okay, that makes a lot of sense. Why didn't my investment advisor tell me about that? Well, your investment advisor is not licensed to give tax advice. Imagine that. The stockbroker that works at one of these name firms or the 1-800 firm that you manage things yourself, they are not licensed to give tax advice. Look on your last statement, and there's a little asterisk at the bottom of that statement which says we are consult your tax advisor. We do not provide tax advice. So that is their catch-all phrase to they are not responsible for anything on the tax related area. So you got to think, I'm paying them for this investment advice, but they're not coordinating it with my tax advice. So if I have $10,000 that could be otherwise deducted or some tax planning strategies, and I'm paying 30% on that, that's $3,000 a year that I'm losing because I'm not getting coordinated advice. Over the next 5 years, that's $15,000. That adds up to real dollars. So if this is of interest to you on getting coordinated tax advice with your investment advice, do give our office a call at 877-654-9798. That number again, 877-654-9798. Now, back to investment tax planning in that rental real estate. Well, I come across, being a tax attorney, again, I have a different objective. That's number one. And I have a different perspective. Number two. So what's my objective? Well, we got to maximize this asset, and it is the net return, the net spendable return, taking tax consequence into account. Then what is my perspective? Well, I come across, being an estate planning attorney, and asset protection is paramount in my practice. I see individuals continue to own their rental real estate in their individual names. Well, the propensity of having a lawsuit come from a renter because you didn't change the filters on the furnace or on the air conditioner, or there was some other hazard, you didn't fix the railing on the stairway, things such as that. You didn't fix that rickety step and they fell and they broke their leg. Well, they're not going to try and cover it themselves. They're going to try and blame someone else. And the person they're going to blame is the property owner, and that's you, the listener here on the Professional Edge. So lo and behold, you have this lawsuit. And if you have not done any asset protection planning, then your personal assets are exposed to the claims of that creditor. And lo and behold, a bad afternoon is sitting down in a deposition with your net worth statement, your personal net worth statement, indicating how much you own, where your assets are, all your hard-earned equity. So you'll be answering some questions on all your personal net worth. Well, they're coming for it if you do not protect your assets. So what we do is put a fence around these assets and secure. And again, we bifurcate the liability. We keep each one of these separate. So one cannot taint the other. We have separate glasses of water, and it's not just in one big bucket of water. So think about that. When is the last time you actually sat down and did some asset protection planning? And that coincides with investment tax planning because it all transpires to protect what you have, to put things in place before you actually need them. So don't wait until that lawsuit gets served on you from your tenant. Do proactive planning. And again, to start that process, give my office a call at 877-654-9798. That number again, 877-654-9798. Thanks for listening to The Professional Edge. My name's Todd, tax attorney, CPA, certified financial planner. More coming up here on The Professional Edge.
We've all thought about it. Everyone listening will need one. Not having one can cause untold heartache, family conflict escalating to the point of a lawsuit. One simple thing that avoids all that: an effective estate plan. As a practicing tax attorney, Todd with Estate Management Counselors has completed over 1,000 estate plans during his 15 years of professional practice. He can help you implement an effective estate plan, coordinate your financial accounts, and make sure you have named the proper beneficiaries to maximize your tax savings. Call 877-654-9798 today and let tax attorney Todd help you implement an effective estate plan. Call 877-654-9798 today. As a tax attorney CPA for over 15 years, Todd has implemented over 1,000 individual estate plans. He has recently authored an especially helpful guide, How to Unlock the Ultimate Estate Plan. This guide has helped many individuals to understand the benefits of an estate plan and how to avoid unintended disasters. Has made every attempt to write this in plain English. To receive this valuable guide, How to Unlock the Ultimate Estate Plan, call 1-877-654-9798 and request your complimentary copy today, or by emailing your request to info@emcadvisors.net.